In this video, I'm going to talk about one of the properties that we recently bought for our clients, and more importantly, that what did we learn from that property and why did we buy that property. So if you want to invest into commercial property, this video is going to help you to understand and more importantly, the rationale behind why did we buy this property. If you want to know, then stick around. All right, so this is a commercial property that we purchased, which is in a place called Emerald. Emerald is in Queensland and it's from Rockhampton in about 3 hours drive inland. It's about 25,000 population. So it's a relatively small town. It's also kind of a farming, a little bit of agriculture and also the mining, right? A lot of minings that is happening there. So what did we buy? We bought a industrial property. It's $2.5 million price. Now, first thing, why did we buy this commercial for $2.5 million property? The rent that it is coming, which is the net rent, is $190,000. Now, $190,000, if you divide by 2.5 million, which is going to give you 7.6% net return. Now, at the time of buying this property, the interest rate was hovering around 6%, which means you can clearly say even with 100% loan, like assuming that you qualify for the 100% loan, assuming that you took that whole 100% loan, this property would give you roughly about $40,000 to $50,000 net cash flow at the end of the year, 40,000 annually. Not only that, this property is also every year 3.5% rental bump. Means rent is going to go up. So 190,000 next year 3.5%, next year 3.5%. This is a 10 years lease. Now this is a very important part. When you sign a 10 years lease, it means like you want to do business there, you want to be there for long term, and these tenants was already there for the last 10-15 years and then they have signed a 10 years lease. So that's a very important part. It doesn't matter where it is. If you have a 10 years lease, that means it's a solid. The rental income is going to come for the next 10 years. It's going to outperform the location that you are looking for. So let me put it this way. In comparison, I would rather buy something which is 10 years lease and assuming the corresponding backings and everything with the lease, then I will buy a 3 years lease with Metro. So 10 years lease to a regional property, commercial, is better than 3 years lease in a metro area. I mean, this is just apple to apple comparison I'm putting together because lease has a lot of weightage. That itself says that the tenant is going to be there for long term. That's the reason we bought it. Now, the second part is the tenant. Who is the tenant? Now, the tenant is a ASX listed company. Now, ASX listed company, as it means, it's a big company, right? It's a multi-billion dollar company. Yes, they are doing these operations for long, but at the same time, is a multi-billion dollar company. What is the chance of that not paying the rent? Pretty negligible, right? Because being an ASX listed multi-billion dollar company, they will pay the rent. And that is exactly, we have been managing this property ever since we bought, and we just send them invoice, they just pay. There's no question, nothing, no discussion, anything, and they just pay the rent. So that's another thing. It's hassle free. It's way hassle free than something that if you buy with a mom and dad kind of tenant. I'm not saying don't buy a mom and dad kind of a tenant, but understand that why did we buy this property? So this property, although it is an Emerald, it's the tenant is ASX listed tenants, which is like that, that's a business which actually attracted us to, go ahead and buy that. Now, if I talk about a little bit about the property is a big 4.5 acre land and 3 distinct buildings. So think about a 4.5 acre land and it's a rectangular kind of a block. And in 4.5 acre, you divide like 1.5, 1.5, 1.5, and the 3 buildings, like in 1.5, one building, another 1.5, another building, another 1.5 is another building. So what it basically means that in the future, you have a strong potential of subdividing and selling it in 3 lots rather than in 1 lot. And that gives you, because 10 years lease, you can't do anything for the next 10 years. You just keep collecting rent. But after 10 years, though this is 10 years lease with 2:5 years options, which means technically it's a 20 years lease. And after 20 years, then you could decide, you could negotiate that what can you do with that property, because the location wise, like 3 distinct buildings, which actually made us attractive that to go ahead and buy this. I'm telling you this so that you understand that why did we buy this property and why it is so lucrative. because if those three buildings could have been together, there would be a lot of friction with different tenancies and all, and it would be very difficult to rent it out separately. But if three distinct, so you just put a fence, or even though you don't put a fence, you can renting it out separately. Remember, in commercial property, even there's a one lot, you can create multiple tenancies from one lot, which is not possible in residential property. On top of that, the land is 4.5 acres, which actually going to give you a significant uplift in the future, because land always appreciates, right? No matter what, land always appreciates wherever it is. Even though Australia, you can see that if you buy these things in the core part in the industrial area, it is going to go up 10 years, 20 years down the line for sure. Whatever land price right now, it's going to go up. Now, the another part that we reason is that tenants business. There are three different businesses, three different buildings, and then three different business. So when we purchase that property, it was with ASX listed business, as I said, and they have actually subleased these to two different other smaller businesses. Okay, let me put it this: the main business is the cold testing, which is the main tenant, which is the client, that they do the lot of cold testing. Now you could argue with me that, oh, the cold testing, we don't know, 5 years, 10 years down the line, it might not be needed. Yes, it is possible, but what we have been doing is that we have been collecting rent, we are getting a positive cash flow. It is a 10 years lease, and after 10 years, even though they move out, then we'll be able to separately renting it out. So there is a chance of getting more rent, and even though that coal business is not there, some other business, some other logistics business, some other industrial property, some other business will be able to take this up and move forward. So that's another part for you to understand, is that when you take a longer lease, and even though that business, if that property would have been only 3 years lease, we would have thought not to take it, but because it is a 10 years lease, and that's how you get it. Now, next one I wanted to talk about is that how did you get that property? Because a lot of people went for that property, right? We had another buyer we were competing with, and that buyer wanted that property with a 15 years lease. So they were actually putting, because it was a lease back, which means that the previous landlord was the tenant right now, so it's a lease back. And then they were pushing for a 15 years lease, where we went ahead, we said that no, that's fine, we are going to go ahead and buy for a 10 years lease. So that's an important part as well, because if we push for that, oh, we also want, and someone else would have said that, oh, okay, fine, we will take it for 10 years, then we would have missed that property. And again, as I'm pointing it out, 10 years is such a long time. It is very difficult to say what's going to happen 10 years from now. And after collecting the 10 years rent, your property is going to be, the rent is bumping up every year 3.5%, which means by the time the 10th year, that 190,000 rent will be well over 250,000 rent. So which is, in $2.5 million point of view, it's like a 10 or more than 10% net rent. Think about this. If you can collect 10% rent, you are going to, and if the interest rate remains like 4, 5, 6% around that mark, you are going to make a lot of money. So hopefully you get an idea about how we source through, how we look, how we analyze the property, and this property, why we bought that property. If you find this video is helpful, please do me a favor, please subscribe this channel, turn the notification bell on, so you get to see more videos like this, and it also help us to reach out to more people like you. Thank you so much, and I'll see you next time. Bye bye.